Today, I want to talk about a topic that might seem like it's pretty far off in the distance, but 2026 is actually right around the corner. And when we're thinking about incentive stock options and the impact of AMT, 2026 is a pivotal year in that discussion. So, I wanted to share an example with you today that just shows how big the impact can be and why you should start thinking about 2026 now if you've got incentive stock options. All right, so we've got another example today showing the impact of a fictional couple that has some salaries and wages from W-2, as well as some incentive stock options that they're looking to exercise during the year. So in this case, we're showing what tax liability might look like across a 3-year period, 2024, 2025, and 2026. And the reason behind that is to illustrate that under current rules, we've got some big tax law changes coming up in 2026 that can really impact your planning here. So let's talk about 2024 and 2025. They look fairly similar to one another. We're showing a little bit of AMT tax liability, a total tax liability of 74,000 in each case, and a little bit of a balance due at the end of the year. So this couple has about $200,000 in wages each, and a little bit of investment income, some itemized deductions. So really kind of a fairly simple just planning discussion, except for the incentive stock options. So I mentioned a little bit of AMT here, $359. Let's talk a little bit about how that was generated. So in 2024, 2025, we're showing that they had an adjustment for AMT purposes of $40,000. And that $40,000 would be calculated as the spread between the incentive stock option, the fair market value versus the exercise price. So let's say, for instance, they have a share that is now worth $11. The strike price is $1, so their spread is $10 on that share. And if they can exercise $40,000 worth of spread with the $10 in spread per share, that would be 4,000 shares that they're exercising, just to give you kind of a really simple example. So in this case, they're exercising just enough to generate a little bit of AMT for the year, but not a big deal, right? $359, that's not too bad. Now, the interesting planning point comes in 2026. And for those of you guys that aren't tax nerds out there, 2026 is a big year for us. We're planning on some relatively big changes here in the tax law. That's because the TCJA tax law changes that were implemented back in 2018, they had a sunset period related to them. So in order to get that through budget reconciliation process, a lot of the changes were set to sunset beginning January 1st, 2026. One of those items that doesn't get a lot of attention but can impact you if you have incentive stock options is the AMT rules are going to change in 2026 if nothing else is done. Now, this is a big caveat that we expect that there will be some kind of tax legislation between now and 2026, or maybe shortly after the year starts in 2026. But we don't know the answer to that right now. And we also don't know how much attention that the AMT issue is going to get between the government powers that be. So right now, what we're looking at is how things would look with this same couple, their same income structure, and the same incentive stock option exercise. So you'll notice right off, there's a couple different changes. First, personal exemptions come back. Yay! Hey, we get some more deductions. And yay, we lose the income tax cap that was capped at $10,000 through 2025. So hey, we're starting to get some more state and local income tax deductions. That sounds great. This little itemized deduction limitation comes back, but okay, that's not a big number. We get more itemized deductions. Our taxable income goes down. Everything sounds great so far, right? Well, tax liability just got a little bit larger. Oh, that's not so great, right? Some of the bracket changes unfavorably start to impact us again in 2026. But then there's this dreaded AMT tax liability. And you'll see it went from $359 all the way up to $16,000, almost $17,000. So, overall, we're looking at about a $23,000 tax impact for this sample client. And they did nothing different other than we crossed into 2026 when the tax law changes are set to impact us. So there are a couple things going on here that are important to note for folks that have incentive stock options. First is personal exemptions and state and local income taxes. Well, state and local income taxes were always an add back, but now they're a bigger add back because we get rid of the cap of the $10,000. Personal exemptions come back, but they become an add back to AMT as well. Got the same incentive stock option exercise, so nothing has changed there. You'll also notice, though, this AMT exemption before phase out gets adjusted as well. And that's going to be also another negative item. Basically, there was a certain amount of AMT income you could generate, and it would be exempt from additional AMT tax. Well, that number goes down in 2026 to pre-TCJA rules. So all of that said, taxpayers didn't do anything different in 2026, but now we're looking at about $17,000 of AMT. And on top of that, we've got some scheduled tax increases that are coming into play here as well. So all of that to say, now is the time to do some planning. So let's talk a little bit more about that. All right, so now that we've seen an example of how the 2026 tax law changes or the reversion to prior rules might impact a sample client, how does that apply to planning in 2024 and 2025, right? Because 2026 sounds like it's a long ways away. The important thing to keep in mind is that you can probably exercise a fair amount of options in 2024 and 2025 without being subject to AMT. So provided the other conditions are right for you to be able to do that. And of course, talk to your tax advisor on this just to make sure, how this applies to your situation. But, now is a good time to make as much progress as you can towards those 2024 and 2025 AMT exclusion amounts. Calculate, your expected liability for the next couple of years carefully, and knowing that we've got some tax law changes that might be out there. Balance the risk that the tax law will end up reverting back to the pre-2018 rules versus some other adjustment that Congress might make to the rules going forward. Always a bit of a crystal ball situation, but at least we know what the rules look like today. So if you can exercise a few of those options without being subject to AMT, now might be a good time to do that. All right. If you have any questions, please throw them in the comments. Happy to answer those, or feel free to reach out to us and talk about your situation individually. Thanks.